Good evening all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, and we are at the 28th of July 2021, just after 5:30 p.m. Central Time. And what a day. You know, the Fed came out today first with the announcement, and then, of course, they came out with the press conference. These are the highlights, and this is how I write in my newsletter. So for those of you that get my full research, this is it. If you go to our website under free offers, it shows you what you can get a free offer to all my research and everything. If you haven't had one before, it's all there for you. I give you the headlines, and then what I do is I break it down, and then I give you a synopsis of it. So you get a real good idea as to what the Fed did, didn't do, and what they're talking about. The things I had been talking to you about, where I thought the Fed was not going to do anything, I don't think they're ready to taper. It's exactly what's coming about. The next thing was, is the Fed ready to raise interest rates? No, we found that out. Is the Fed going to announce something at the Jackson Hole? Well, that's still a good 6 weeks away or something, but I doubt it. Is the Fed know what transitory is when they use that term? Yep, they defined it today. What about substantial progress? They defined that today as well. Let me give you the gist. They're not doing anything at this point. So what does the market do? Well, gold got a bid from that. Silver's got a bid from that. Foreign currencies a little bit up. It's no change in anything. Bonds and notes holding a little bit what? Further loss of yield because the Fed isn't moving on the market as so many people thought it would. They discussed, by the way, the vacancies of everybody wants to hire somebody and they can't hire them. So the amount of the workforce to the help wanted ads, they discussed that. They discussed what troubles them. It's all there and it's in my newsletter. But we do charts here. So when you look at a weekly area chart of closes, well, it's a down week so far. We're down 1/4 of a point on the chart. Not very much, I think you'd agree with me. 1/4 of a percentage point, that is. When you look at the S&P 500 index, okay, the market is still looking pretty good. It's within striking distance of all-time highs. The pattern today became one of higher lows and higher highs. Well, where I went to school, that's an uptrend. When I look at where the support of the market is, the 18-day average, there's a problem. To get there and find that support, you have to bust through the last swing line low right here at 43.6475, and this number is going to be, let's call it 43.56. So I wouldn't want to see that because that would not be bullish. That would wipe out the bullishness on the chart. What about if the market looks at resistance? 44.33 1/4, the upper Bollinger Band. So that's going to take me back to my good friend momentum. And when you look at the slow stochastics, I can tell you just looking at it, you have 2 days in a row now where both numbers are over 80. You could be the third day today, Thursday. I know I'm recording Wednesday, but the market's already trading for Thursday. If that's the case, I revert back to what I teach in the Enhanced Bollinger Band course. You know that all you have to do is go to the website, www.iraepstein.com, and it's there under the word education. Go there. You learn all about it. So to make a long story short, that could be the play that comes up. This play right here, now as a chartist, I'm not that interested yet. In the NASDAQ, not even trying to embed. You're just staying overbought. The trend is up, having a heck of a time at that upper Bollinger Band as I teach. I'm not looking for it to go anywhere. That's not the same pattern that you had here. Here you'd hit the band, break down, but you were embedded the whole time. That set up how to play the Bollinger Band. This setup right now is just saying at Bollinger Bands, you don't keep any part of your position. As a futures trader, I teach they come out. Very big difference between holding half the position, getting out, buying back, getting out, buying back, getting out. In the Dow, could be like the S&P, could become embedded. I'll get all excited. So basically, I got my fingers going like this, and I'm going, okay, I'm getting ready to push the buy buttons, but it can't be tomorrow. I need to see the embedding. In the Russell, well, this is wrong. You've got higher lows, higher highs. I made a mistake. I just didn't take it off. So that chart turned bullish. Momentum up, trend up, support back at 22.15, but that's a heck of a risk, 60 points almost, or 50 points on that trade to get long and risk that. You know, when you're not embedded, I teach in my charting course, my regular course, a monetary principle. And I found that principle by going back over the many decades I have been in this industry and looking what's too big of a loss, what is something that my clientele could have handled, what could I live with at night and not pull my hair out of the head. And if you'll notice, I still have at my age a heck of a lot of it. And that's because you learn to trade with what you can afford to do, number one. Number two, you trade the chart, not what you read, not what you hear. You learn to think for yourself. And that's what I want to be. I want to be the guy in the morning you go to and you go, you have this opinion. This is what it looks like to me on chart. What does Ira think of? Is he seeing what I'm seeing? That's the goal of why I do all this, and that's why I have paid subscribers. Got it? That is the business. Next, what we do is we step into the VIX. Okay, the VIX did exactly as I thought. If you'll recall, is the market was right here, and this is before I went on my vacation. I thought that the pros might write right into this area, calls looking to get back to the 18-day average of closes. And then the market took off to the upside on it. I get it. I fully understand what it did. And here's the market now running, but this is what it's got a history of doing. When you're writing the calls, it has a history of going beyond them. If you play how much, I don't know how to figure that out. But then I'm looking on the way back down for it to first attack the 100-day average. It's the closest, so wherever they wrote it, that could be the first profit. But ultimately, it owes. The word is owes. Does it have to hit it? Nothing in life has to occur except paying your taxes and death. 1705, wherever that 18-day average is, will it hit it? Will it hit it? Hit it today. So they made their money. That's the point. It's a lot easier to write the puts. It doesn't seem to slide through it the same way. Maybe it's because we've been in this secular bull market for almost a decade. I'm guessing that's it. In the 30-year bond, well, momentum is flat. You have a pattern of higher lows but lower highs. That's neutral. 10-year notes, higher lows, lower highs, neutral. Dollar index now bearish. What did I tell you as you were up here? I said, be careful, this market's not going through that upper Bollinger Band, and it didn't. And now you've backed off from it from the 93.07 or 04 level, whatever you want to say. You're back down quite a bit. You're down $700. And could you hit this lower band? Absolutely. Now let me flip my big mouth. I think that it'll have a hard time staying under that. If it does, well, then the next support zones are very easy to see. The combination of the 100 and 200 day, but I would think that the pros, not being an embedded reading, if the market gets there and if they're short, if they wanted to go through the Fed meetings today, they're bearish, and I think the lower Bollinger Band will be the first support, as I think the resistance in the euro will now be there, and you've turned the corner in the euro. You're now back into the bull camp. Remember, they're reverse mirrors of each other. In the British pound, you're into a lot of resistance. It's right here. Starts at 139.25 to 139.59. Overbought. The juice of the market's been made. Doesn't mean it can't go higher, but I think the smart money's looking to come out or coming out. Bitcoin's becoming that gorilla glue trade. And you have to learn to recognize this. Back here, right here, it attacked, and this is only this past Monday, it attacked the Bollinger Band. Instead of just not hitting it, came back to it, okay, came back to it, and look what it's doing. It's just marrying itself to that. Until it leaves it, be careful. That could be a very bullish situation. When a market latches on, it tends to drag the slow stochastics and changes the momentum on you. Can it last? I don't know. Is it a buy here? The way I teach charting, no. It's certainly not a short sale. All right. Why is it not a buy? Because it's overbought. It is in an uptrend, but not the chart patterns I'd want. Brent versus WTI. Well, look at the battleground. It's the 18-day average. The fact that you're slipping means that Brent is losing in relation to the WTI. The market is overbought in an uptrend. It doesn't seem just yet want to get away from that 18-day average of closes. I think the trade will look at this as bullish against 7,300, and the risk is to not get back under 7,207. When you look at the WTI, the high tonight 72.48. This high was 72.60. Did I miss something here? This high was 72.43. I did. So on the close today, I should have taken these off. I was in a hurry because I'm leaving early tonight to do something. But higher lows, higher highs is bullish. What do I think? I think the trade is going to buy at 71.67, maybe. Stop under 71.07. That I think is for sure. And why do I say maybe? The way I teach charting and the way I think some of the algorithms build it, you get to a point that they might call overbought and they'll avoid a chart pattern. The way that I teach you, that pattern is when you get over 70 on a reading and you're not embedded, and that's what you've got. So to me, nice to look at, but that's it. That's the same thing in gasoline. I'm certainly in the bull camp, but it's too overbought for my stomach. So you put it all together, you try to come up with a game plan, and that's what I try to do for you each morning when I start recording. Now at 5:40 in the morning, and that is Monday through Friday, barring a holiday or my taking some time for myself, and I don't take a lot, as my subscribers know. My idea is that you have your own ideas or you're looking for an idea. I want to be the guy you go to. I say, buy here, sell there, do this. This is the stop. Hey, that was a great trade. Hey, that one didn't work out. Everything will have a risk associated with it. Everything I put out is based on everything that I've learned, and I explain it in detail on the charts. Who else is doing that? I guarantee if you're working with a broker, is he sending you a chart to look at? Oh, do you see this with me? It's so much easier with a video. I think you know that. I cover 40 some odd charts. These is the sequence. There's a scroll bar on the website on the bottom. We have a member login. You go right to it. Can you watch the videos without going to the website? Sure. You can watch it on an app we give you for your smartphone or your whatever you're watching, a tablet, and you can do that, but it won't have the scroll bar. Only the one on the website will have the scroll bar, and it'll light up. I'm in metals, I'm in grains, I'm in meats. You just pull. You're right where you want to be. Why? Because not everybody wants to look every morning at a 20-minute video. I do. I record them. I want to see where the action is. To me, trading is like trading a sewer cover. I know that's crazy to you, but since I'm not a fundamental trader, I'm looking for that pattern. And if the market has good volume, so in other words, if I'm wrong, in order to get out, I don't lose the house. And when you trade some of these thinner markets, lumber, OJ, other markets, you can lose the house like that. You want volume. You want there to be a narrowness, very small, in other words, ultra thin, between bid and offer. You know you're going to get that in currencies typically. Same thing in stock indices. Go through a report? No, you get a gap in the market because everything changed on that piece of fundamental. But I walk you through this and I train and I teach and I reinforce. Go to our website. Under the word research, it's all explained there. That's how you can find out more about this. If you want to subscribe, that's where you do it. I'm Ira. You have a good day.